Welcome! Today we're going to be talking about inheritance tax. What's it all about? Let's sit down and have a chat. Hi, my name is Kimberly Shatkar, qualified chartered accountant, property investor and entrepreneur. This is my channel which covers everything to do with property tax and accountancy. Today we're talking about inheritance tax. Why is it such a big deal? What's it all about? Well, the reason it becomes a problem for a property investor is because we tend to get a few assets, which means we tend to have a little bit of money about us, or hopefully anyway. Now, if you think about having a portfolio of, say, 5 properties, and even if those properties are only worth 100,000, all of a sudden, you've now got £500,000 worth of assets. Now, with £500,000 worth of assets, plus your own home, maybe a bit of cash in the bank, maybe a few investments or other bits and pieces here and there, you've probably got an issue because you're now going to be paying inheritance tax. So what is inheritance tax? Inheritance tax is the tax that we pay on our estates. Now, our estate is basically everything we own less everything we owe at the point of our demise. So not always the happiest occasion, but the taxman wants to look at your estate at that point in time and decide whether you owe any tax. Now, they're not just going to tax you on everything, so that's a real positive. We all have something called an allowance. This allowance is $325,000. It's been this for a while and we're expecting it to be for a while longer, which means everything up to this amount, you don't pay any inheritance tax on, and everything over, you start to pay inheritance tax. Now, it's not the cheapest of taxes and it's sitting at 40% of the estate over that $325,000. So if we just look at that £500,000 worth of property that you've now got $175,000 over that tax threshold, which means you're going to be paying 40% on $175,000. Obviously, if it's your portfolio, it's probably not a problem to you because unfortunately you're not around any longer. But it will be a problem for those descendants of yours that you've decided to leave your estate to, as they'll be losing a large chunk of money to the taxman. So how do you figure out the value of your estate? It's a relatively easy calculation. All you need to start doing is putting together a summary of all your assets and all your liabilities. So whatever point in your life you are, you could get this summary set up now, which will keep you in the loop of how much your assets and your liabilities, your estate is worth. And that gives you a bit of planning potential. So throughout your life, as you expand your portfolio, as you expand what's probably going to be an inheritance tax problem at some point, at least you're aware, which means you can do some planning. Inheritance tax is known as the voluntary tax, not because people are trying to evade or avoid their taxes, but if you do some planning and put things in the right places or do things in the right order, there are ways to reduce any inheritance tax liabilities that your family will be charged. I'd always recommend that you start planning now, whether you're in your 30s like myself or whether you're in your 50s, 60s, 70s. There's plenty of time to make sure that you can help reduce any tax from the inheritance point of view. And then it means that your family will receive more of the funds that you've worked so hard to collate, to generate, to create over your lifetime. Now, you might say, what allowances are there? Well, there's a couple of great ones available to you. So if you do have family birthdays, weddings, different events happening, you could gift some money away to those family members at different values. I'll talk about some of these reliefs in more detail on a separate video so that you can find out what you can do to help save some money. Another great one that you can use is if you have income that you're earning and you're not spending on yourself, you can spend that money on whatever you wish. This is called spending money within your normal income, which means you're not gifting your estate away, you're just spending the money that you're already creating and generating and spending it on whatever you will. Now this could be holidays, gifts, presents. You could even be helping to fund school tuition or accommodation or different things for family members if you would like to. So out of this money, it is making sure that you are not building up your estate and you're actually making sure your estate is not going up in value. We find that a few people who have assets such as property, such as share and stocks portfolios, their value is actually increasing. So from an inheritance tax point of view, this is a problem because we're not reducing your estate to help with the inheritance tax issue, we're actually increasing the estate. Now, obviously, during your lifetime, you want to be increasing your estate so as to benefit from it yourself and to benefit your family. As we get towards the end of our life, we want to try and reduce or hold what we have so that the issue does not get any worse. So today, the real topic is to really let you know what inheritance tax is, which hopefully you found out a bit more about what inheritance tax is and when it kicks in after that 325,000 mark. It's at 40%. So on that basis, there is quite a heavy burden on anyone over that amount. And the key here is start looking at what you do have and what expenses, what liabilities or loans you have against those assets so that you know where your issue is starting. It may be you're at the start of your journey, which means the issue isn't a problem yet. It may be you're towards the end of your journey with property, or you have a few health concerns, so you're starting to really think about these things. This is the time to really just make sure you know. I'll be covering a video next which will go into a few of the things that you can do about it and how you can help improve your position. So check out that video when it's released shortly so that you can see what you can start doing to help improve your position and reduce that inheritance tax. I hope today you've discovered more about inheritance tax and how it might affect you. If you've got any questions on what you can be doing about it, let me know in the comments below.